After backtesting ICT 2022 mentorship for more than 3 months and seeing the insane results, I finally came out with this 7 easy step trading plan. Step 1. Draw a vertical line at 8:30 and 11 New York Standard Time on the 15-minute time frame. So we start trading on the 15-minute time frame. Step 2. Draw a horizontal line on a swing high and low nearest to price. I'm going to do a demonstration of this on the charts as we get to it. Step 3. When the high or low is broken, drop to the 1-minute time frame to look for a trading setup. So we start from the 15-minute, then we drop down to the 1-minute where we start looking for a trading setup. Step 4. Wait for an impulsive move that takes out a low or a high and forms a fair value gap. Step 5. Draw out the fair value gap formed and wait for price to return. And when price returns, we place an order on the fair value gap with a stop loss above or below it. Then step 7, which is the last step, we target the negative 0.5 level on the fib for our take profit. Before we get to our charts, I just want to give a shout out to my community post because this is where I post all the setups that I take within the week. I can't make a video of every setup that I take within the week, so this is the best place where you can go and see all the setups. And we had an amazing setup within the week, which was actually a 1:5 setup. So if you want to check that out, get to my community post. On the charts right now, we are going to start with the steps. So step 1, we are supposed to draw a vertical line from 8:30 to 11 New York Standard Time. After doing this, we look for a swing high or a swing low just before 8:30 that we are expecting price to trade above. Here is going to be our swing high, and here is going to be our swing low. We are expecting either of this swing low or the swing high to be taken out. Then we drop down to the 1-minute where we start looking for a trading setup. You can see right here, the swing low just got tagged. So we drop down to the 1-minute, and that is where we start looking for our amazing trading setup. And what is going to be our trading setup? We look for a very good impulsive move that takes out a high, or an impulsive move to the downside that takes out a low. Then we look for a fair value gap within that impulsive move that we are going to be looking forward to taking a trade. You can see right here there are so many impulsive moves, like it's very impulsive, but there was no fair value gap, so no trade. And as well, you can see here we had quite a good impulsive move. But then another thing about the rules, we want to see at least 2 bearish candles before the impulsive move, which we did not have. And also we want to see, because this is the fair value gap, right? This is candle 1, candle 2, and candle 3. We also want to see candle 3 of the fair value gap be bullish if it's a bullish setup. So candle 3 here was bearish, so no trade. Nice impulsive move, right? But this impulsive move did not take out any swing low. And also you can see we had 2 fair value gaps, the higher fair value gap right here and a lower fair value gap right here. Another thing, for the lower fair value gap, we see that candle 2 was bearish, but candle 3 was bullish, so no trade. Okay, we can see here very nice impulsive move, right? But we can see it did not follow one of our rules. We want to see at least 2 bearish candles before the impulsive move. So no matter how good the impulsive move is, we are not going to take the trade. Also, we can see here we had quite a good impulsive move, not as good as I would love to see, but it's manageable. The thing that stops it from being a trade or a setup that we will want to trade is because we want to see at least 2 bullish candles before the impulsive move, in as much as it took out this low here. But because we did not have at least 2 bullish candles before the move, we are not going to be taking that trade. Oh, and there you go. If we actually took this as a fair value gap and we took the trade, we should have been taken out right here. So that rule is very important. Go back test and you're going to see the results. Okay, you can see we had a kind of manageable fair value gap right here. But the reason we will not take that fair value gap is because it did not take out a swing low. So we continue searching. Nice. We can see very good impulsive moves, very strong candles that took out these lows. But you can see as well that we did not have at least 2 bullish candles before the impulsive move. So in as much as it looked so energetic, we are not going to be taking that as a trade. This is now what I'm interested in. As you can see here, we had at least 2 bullish candles checked. Now we have a very nice bearish impulsive move checked. And we can also see that that bearish impulsive move takes out this low right here checked. So now we have almost all the rules ready for us to take a trade. But then there is another thing. We can see here that price has formed one fair value gap, right? Based on where we are currently at in price. Whenever I am looking for the impulsiveness of the move, I like to look at the impulsiveness from the candle that is within the fair value gap. So you can see this is candle 1, candle 2, and candle 3. The candle within the fair value gap is going to be candle 2. So I always like to measure the body of that candle to get the impulsiveness. And as you can see here, the body of this candle is not up to the 25 points that we love to see. So another thing that I'm going to be looking forward to is this candle here to also form a fair value gap. So it should be within a fair value gap, so that now I will measure the bodies of the first fair value gap candle and also the second, so that we can now get to the 25 points that we are looking forward to. And there you go. You can as well see that this candle also is a bearish candle, very tiny here, but on TradingView it's better than that. And as you can see as well, it also formed a very, very, very nice fair value gap, very, very large. With this, if we are to measure this, you can see that both of these candles form a fair value gap that is 33 points. So it's greater than the 25 points that we want to see. With this, we have all the rules that are met for us to take a trade. So what do we do now? We grab our Fib tool. We take from the high of candle 1 of the first fair value gap till the low of candle 3 of the second fair value gap. And as you can see, where we should have been taking our entry, that is on the second fair value gap, the high of candle 3, it's going to give us not a very good risk to reward. So what do? We go to the best option, which I always say in my videos, which is the 0.5 or the 50% of the entire range. So that is where we are going to be placing our entry. We are going to be placing our stop loss at the 1 level of the Fibonacci. Then we are going to be taking our profits at the negative 0.5 level of the Fib. So let's place our trades. Now that we have placed our trades, we are going to delete all these things which we don't need, and we are going to watch to see how price is going to play out. You can see right here, this is where we have been tagged in. So let's see what price is going to do. Now, at this point, when I see price playing around my entry this much without going, I already start getting very, very skeptical about the trade, because I just want to see price go in and get out of the zone immediately, as I've always been showing in the channel. So at this point, I'm getting very, very skeptical, but I'm not going to get out of my trade. There you go. And as you can see, you see this was the range, right? From the high to this low. And I always say the moment we take out this low, that is when we take our trade to break even. So immediately we go break even on our trade. Then we just anticipate, or we wait for price to get straight to our take profit. As you can see, price actually came and took us out at break even. You can see these are also going to be the same kind of trades that you're going to get. I did not want to give a perspective that every single trade you're going to take with this strategy is going to be a profitable trade. And I've given you a lot of profitable trades with the different videos in this channel. And I also wanted to give you another perspective of having a trade that is going to probably hit you at break even, or even probably at a loss, because not every trade you're going to take is going to be a profitable trade. This was one of the trades I took within this week that was actually break even. But then, if you want to see a week that actually gave us a good trade, a bad trade, and even a very, very ugly trade, then check out the video right now on the screen. With that said, Catch you guys in the next one.